Okay, let's just verify that we're recording. All right, we're good. Welcome everyone. Today's October 1st. It's Wednesday. I hope everybody's doing good. Thank you guys for joining. Today we're going to talk about a little bit of why we should welcome risk and we should have respect of the cost of being wrong. Um, we're also going to want to speak about we can speak about we can speak obviously we can speak about what kind of setups we can potentially look out for or we're gonna look out for potential moves that are gonna probably happen within between today, which is Wednesday, and Friday. They're likely gonna happen between today and tomorrow, but since we're talking about the rest of this week, it's gonna be from now until Friday. Potential moves that can happen. Let's also speak about there's a couple quotes that I came across and I feel like I definitely want to share them with you guys. And if you guys have any perspective on them that you guys want to speak on, drop them in the comments. If you guys haven't already, like, comment, and subscribe. And join my free Discord. I share my ideas. I share types of different positions that I'm going in. Anytime getting into the markets, most of the time I'm sharing um these moments that I'm getting into the market. So yeah. All right, so let's get down to I really want to speak on these quotes. Hmm. First, let's talk about this one. So this one is treat each dollar as a loyal worker. Um, every dollar you have is a soldier. The question is, would you send your soldiers into a battle without a plan? Obviously, you don't want to send your workers, your loyal workers, which are each dollar that are units of power that you have. You're not going to just blindlessly send them into the wilderness with uh improper risk and without a plan, right? You want to create a plan. Once you have a plan created that makes logical and financial sense, meaning at least a 1 to 3 risk to reward at a an important key level in the markets, which is likely a good zone where there's going to be an exchange between sellers and buyers or buyers and sellers. You're gonna just make sure that this is structured so that you know you're on the right track, at least um possibly on the right track, because we never know for sure if we're on the right track, but just in case, we want to just make sure that we have a good risk management idea of your potential trade. So yeah. And here's another one. The market is a battlefield and your account is your army. So your army is filled with dollars, right? Dollars all across the board, and each of these dollars, you want to think of them as your loyal workers. So if you want to survive, build a system, and if you want to last, follow it every single time. Risk is not the enemy, mismanagement is. I shared this in a video on Instagram. On my Instagram account, I shared this and I told you guys that risk is not the enemy, mismanagement is. I'll show you guys what video I'm referring to, and that is gonna be, let me start sharing my screen. All right, so here's my Instagram account. If you guys notice, I changed my Instagram account, so now it's Ant R2R. So clearly, Ant R2R means Ant risk to reward. As you can see, R to R in my bio, but this is the video I'm referring to. So one thing, or I'll let you guys listen to the video and then I'll comment on something about um the video. But here it goes. Okay. If you check out this photo right here, you'll see that I have less than a 50% win rate. If you looked at that photo closely, you'll see that my net P&L is
over 18% within the last 2 weeks. So you do not have to be right all the time. You have to just have a simple risk to reward rule that you abide by. What does that rule look like? Maybe if you're willing to risk $50 for $150, which is a 1 to 3, then that should get you far in the trading space. Risk is not the enemy. Mismanagement is.
Okay,
There's a
so
broken system.
so that's the video that I'm referring to. If you look back at this photo right here, um, what's obviously true is gonna be the trading win rate percentage. Um, The net P&L that might be a little bit off because add I did add funds to the account just to boost it up a little bit because I put some money into crypto and I was trading a little bit maybe for like a couple days between last week and this week. I did a little bit of trading of crypto, what is it, stable coins, um and I mean it went well at first and then until it didn't really go well. So I figured I might just stick with what I'm familiar with, and obviously that's what I'm doing and what I have been doing for the past years, 6 years, right? I don't want to switch what's not broken. I don't want to, yeah, fix what's not broken. So the net P&L, it's off by a little bit. Um, and I did end up, I think I ended up, it ended up getting updated because I guess at the end of the day or close to the end of the day, it updates and stuff like that as well. Since then. So, but my trade win rate is still less than 50% regardless. Regardless of how much I invest into it. Yeah, the net P&L could change, but what's not going to change unless I take like ta actually take trades is going to be this trading win rate, right? So, my trading win rate is below 50%, but I'm still in profit. And here, let me show you guys. Let me show you guys the numbers. So first, what I'll do is first what I'll do is I'll show you the TradeZella. So as you can see, net P&L it says 21%, but again, I did add funds to it. Not that the account was in the red. It wasn't in the red. This is a new account. I started this account last month, and I started it. Uh, it looks appears to be the 16th of September. Because I ended up switching to a different broker. So now you can see that so right up maybe 2% this week, right? Because you got 1%, so almost 2% this week. Then this week you can see, not this week, but last week you can see it was negative 1%, positive 5%. That's about 4% positive. This is only negative 0.02, and then that's like negative 1%. So that's about finish the week off about 3%. And then this is the current week. You can see 2%. Doesn't look like it traded on Tuesday, and then Wednesday up 2%. So you can see here that is about, let me do that over. 2%, 2%. Then you got 4%, 3%. So that's 5%. 7%. No. So about 10%, right? We're up about 10% within less than 2 weeks, I believe, right? 4 days. I mean, it is definitely about 2 weeks. So within about 2 weeks, you can see there that the account's equity has grown about 10% based on based on the trades that I've taken, counts up about 10%. In addition to that, there's a post that I shared as well, and I think it's very helpful for traders. So this is what I'm referring to. So in fact, what I'll do is I'll share with you guys a different one so that you guys have a better understanding about the All right, I'm trying to find it. All right, here it is. So that this should definitely help. All right. All right, so this shows you that if you have $1,000 account balance and you make 10% on your $1,000 account, that's $100. So this is pretty much where I'm at right now. My account's equity, it's started off around like 1,300 and then I made about 155. I also invested about one or 200. So now the account's equity is currently sitting at about $1,622. So that's where we're at right now. But right within the last like 2 weeks, accounts equity has grown 10%, and that's pretty much this section right here. So that's where you're in the accounts equity of being around $1,000. 10% of the $1,000 that you make net is gonna give you about $1,100. But if you're trading on a $10,000 account, now you make 10% on a $10,000 account. You're looking at $1,000 profit, which gives you in total, $11,000. Now, if you grow your account to $100,000, you make 10% on your 100,000, that's netting you $10,000, which grows your account's equity to 110,000. Then you bump up and you go from trading with a $100,000 account now to $1 million. Now, when you're trading with $1 million account and you make 10% on $1 million, that is $100,000 giving you an account equity of around $1.1 million dollars. You go from 1.1 million or $1 million account con into a $10 million account. Now, if you're trading with a $10 million account, then 10% profit is going to give you $1 million in profit, which will net or not net you, but now your account's equity goes from 10 million to 11 million only with 10% profit. So this is the compound effect. So compound effect, it just allows you to it makes you understand how important being consistent is, and it also um I want to say molds the idea of sticking to your plan, don't, not deviating from your plan, having a good approach with your emotional behavior and emotional regulations. That's obviously important in this industry. And just having a game plan, sticking with your game plan. Even before you enter a trade, you want to make sure that you have a reasonable and sensible game plan with proper risk management. Because again, risk is not bad at all. It's mismanagement is what's bad. All you have to do is have a strategy. Um, with your strategy, you cut your losses short, meaning if you know you're wrong, you don't want to just hold on to the trade knowing you're wrong. And if your winners are winning, then stick with your winning trade for as long as it makes sense so that you can make more than just hitting a take profit level, if that makes sense. Um, In addition to that, what I want to share with you guys are a few other quotes that I resonate with. Let's see. Oh, okay. So this one's gonna be about how they make a lot of talks and headlines about the big trades of the week and even the big trades of the day. You'll hear a lot of people online or people on social media talking about those big trades that such and such or XYZ had made. Again, for the week or even for the day, right? There's people talking about how they had this 100,000 or $200,000 day finally. Um, so those are what makes headlines. But what doesn't usually make headlines is the consistent trader month after month. Um, so this just helps you understand that you're in your own lane. It's you versus you, and just stick with the process. Don't deviate from you going against yourself because if you lose your, your funded account, or if you blow your account just because you want it to be, um, just because you wanted to make a social media post about how your trade went and, how you over risked for a couple $1,000 potential profit or couple thousands of dollar potential profit just to end up blowing your account. Like, it doesn't make sense to do that. It makes more sense to be the person who outlasts others in conditions like unpredictable market moves. Consistency wins at the end of the day. Sticking with your plan is what matters, and there's nothing more important than that. But hold on, I'm looking at okay. All right. Yeah, so that just talks about what usually makes headlines. So when you are familiar with these headlines, you get exposed to these headlines that makes that goes around and it is generating all these views and it's getting a lot of attention. You don't want it to get to your head because it's easy to like those stuff are attractive, but you don't see these blown funded accounts that these people are getting, that these people are going through, and just to get, a payout, right? Because some of these people they're blowing tens of different live accounts to get, to at least get a little bit more, positive and stuff like that. It gets very deceiving and dishonest. So just look out for that. I think it's good to pre-frame that so that you at least understand once you see something on social media, um, a lot of times, it's discouraging to see stuff like that. Uh, And this kind of correlates to what I just said. So, who do you think survives in the long run? The gambler or the steady operator? So, you want to be the steady operator who's consistently profiting month after month. You don't want to be the one-hit wonder. The one-hit wonder is the person who's inconsistent, doesn't follow their strategy, over leverages, doesn't have a good risk management system, and blows their accounts you know, without learning from their mistakes. Also, this is kind of correlated as well. So everyone wants to trade that makes them rich overnight, but the real wealthy traders are the ones who stick with their system through thick and thin. Are you in this game to gamble or to build wealth? Obviously, you want to be the person who's in this game to build wealth. The gambler is the one who's over leveraging, improper risk management, right? They're mismanaging funds. Um, they don't stick with their plan. Just broke. They have a broken system. Here's another one. Every trade you take is a test, not of the market, but of yourself. Will you follow your rules this time, or will you stick with your plan? Or will you let emotions dictate your actions? If you fail the test, the market will punish you. If you pass the test, the market may or may not reward you on that trade, but over time, the rewards accumulate. So this is where law of accumulation comes into effect. If you're the person who hold on, because I see that I might have missed this entry right here. Never mind. It doesn't match my rules. So yeah, it doesn't match with my rules. So but what about this one? Yeah, this one also doesn't seem like it is with my it's not with my rules anyways. Doesn't meet my criteria, so I will not I have to wait. Yeah, but forgot where I was. I'll just continue. If you guys have anything to comment, any comments on what I shared with you guys so far, drop them below. Let me know what you guys think. Um, do you relate? Do you not relate? Why don't you relate? Why do you relate? Um, I don't know. What's your experience like? Or do you have any questions so far? Oh, here's a good one. So every trader takes losses. There's no escaping that. The difference is in how you handle them. Each dollar is a unit of power, so risk each wisely. You don't want to just send them out each of your dollars to the battlefield without a proper blueprint for each of them. If you're willing to risk putting out an apple, you should expect to at least get at least three back in return. That's a proper business model. You don't want to say, "Hey, I'm gonna put out one apple for one apple." It's almost like planting seeds. If you plant seeds or plant a seed, let's say you plant a seed, you're gonna expect more than one fruit to come out of that planted seed. You plant an apple seed, you're gonna expect more apples, more than one apple to sprout from that plantation. Hopefully that makes sense. Um, all right. This is a good one. So the market is a battlefield and your account is your army. I don't know if I said that already. Oh, if you don't lead with consistency, you're marching your men into chaos. Do you really expect victory under those conditions? That one, that one should resonate with most of us. One over leveraged position is all it takes to erase your t one over leveraged position is all it takes to erase your Let me try this again. One over leveraged position is all it takes to erase years of discipline. That's like saying, okay, I've been there. I've been here before. So I remember there was this time I was trading US 30 and I put in about $500. I was so confident in this trade. Boom, I get in and I see that I can risk my entire account's equity of $500 for potential $15,000 gain. The move made, I mean, yeah, I mean, who wouldn't risk $500 for 15,000? But at the end of the day, if you're risking 100% of your profits for 15,000, I mean, that's not a good habit to adopt long term. Um, because at the end of the day, I blew that account. I blew the $500, and that's not how a that's not a guaranteed bulletproof strategy would work in the long term, right? Maybe in the short term, but not in the long run. That the person who consistently risks 100% of their account is almost 100% likely to end up losing it eventually. But yeah, overall, you should have respect for the cost of being wrong, which is why you should always risk accordingly and just have a good idea of how you're gonna structure your risk management. That is pretty much what I wanted to go over with you guys, and I think I'm missing something. I feel like I wanted to go over something else with you guys, but I'll start. I will start excuse me. If you guys haven't already, go ahead and just follow that real quick. That's my Instagram account. and R2R. I'm gonna share with you guys some more ideas on there. Oh yeah, here's my TradeZella account. I think I showed this to you guys already. But yeah, you can see how this week went. Yeah, and how it's going so far. So I'm not actively participating in any trades right now. I am looking at gold, silver, and Nasdaq currently. Possibly S&P 500. So I've uh I've got a good amount, a good percentage off of silver this week. I haven't traded gold this week. Actually, I did, but I took a loss on gold, but it was only like 0.75%. Um, Obviously I came out profitable in the long run, which that didn't really affect. I think in the last video I told you guys that I changed from having like a white background to a dark mode type of background because usually if I'm waking up at around London session due to an alert getting set off for price around a good supply or demand zone where I want to focus my attention on, I'm not being blinded by a bright screen. Um, but yeah, so that's the reason why I changed the colors. Now, currently I'm looking at gold to I want to say come around this area mainly because if you look at the 4 hour time frame, there's a gap in this area or imbalance in this area. Usually if, we're bullish or bearish and we see a 4 hour imbalance, price is most likely to come to that zone. And if we start scaling down time frames, we should see another imbalance. And can we find one around here? I mean, maybe not right here. I would honestly say an imbalance could be right around here. So I want to say we could probably get some momentum to push down around here. I'm gonna go ahead and set two alerts because this is a really important key level. I really don't have faith in this, but I do have faith in this one right here. When was this? Tuesday. So okay, so and this was that was this week. Tuesday. Okay, yeah. So Tuesday we should okay, so Tuesday. So we could potentially get a mitigation for like 50%, between 50% or even more of a retracement, and the mitigation should happen of the mitigation for Tuesday's pullback. Tuesday had, a drop pricing down gold to around 38.20, and then we topped around Wednesday around 3. That's gonna be 3 in the morning, so around London session. Yeah, 3, 4 o'clock. Um, all right, so that's my expectations for gold. Silver, I'm expecting similar. Honestly, I mean, this wasn't really enough. Once it wiped this out right here, it wasn't really enough to get me in. It is honestly though, it is a this is a 15 minute, so there's a possibility that this is the move right here. Um, if I go in right now, I would pretty much be, as long as this candle closes, this would be my move right here. So that's about a 1 to 2. I don't take 1 to 2s, so I would need to get a pullback, at least a pullback into roughly like right here, like right around here. So that would be a good 1 to 3. And because we did fall in that imbalance, not only that, I mean, this is kind of yeah. I mean, this is still a good reason to buy because overall, this is a 15 minute. You can't you can't knock that. You can't say that this is not a 15-minute low and that this is. not a 15-minute high because it is. And if we shift it on 2 minute within an imbalance, I mean, it still counts. This definitely still counts. Wipe taking out lows right here. This was definitely the overall 1 hour low. So I mean, still aligns. We just have to get a good risk management setup. And again, only going for one to threes. So I'm gonna just wait until price drops down for at least the 1 to 3. Then I'll consider it. Probably risk about a 1.5% on my live account. And that's gonna be silver. So potential silver, potential gold setup. NQ, Nasdaq, we've got a newer high. So we're bullish on the daily, we're bullish on the 4 hour. Currently we're sitting at a 1 hour bullish move right here. We're probably gonna get a pullback if we scale down to look for a imbalance. Um don't really see anything on the 5 minute. I do see something around the 2 minute, maybe like right here, or honestly, even right here. Um, who knows what's gonna happen right here, but I'm definitely considering if price pulls that back around here or around here, that's gonna be a good point or area of interest to start looking for buys. So that's Nasdaq. S&P 500, definitely bullish on the daily. Look at the 4 hour time frame. Obviously, we're bullish on the 4 hour time frame. Now, what about the 1 hour time frame? So 1 hour time frame, tricky, tricky. And if it's tricky, I'm thinking I'm gonna lean more towards trading NASDAQ if it presents the opportunity instead of S&P 500, just because it makes more sense. You don't want to, how do we put this? All right. Here, let me share my screen. I mean, I'm sharing it already, but just think about this. Let's see. Hmm. This is gonna be an obvious question. So, all right, yeah, this is gonna be an obvious question. All right, so boom, you see how we got, I'm sure you guys probably watched Squid Games by now. So, would you rather, would you rather play this game, this Squid Game, for four for over 4.5 million won or 4.5, whatever your currency is, let's say US dollars. I'm sure most people that are watching are in the US. If not, thank you guys for watching out of the country. I'm in the US. Um, but would you rather play this um physical game, this risky game to have a potential profit of over $4.5 million? Or would you rather be handed this $1 million check with with no limitations. Obviously, you're gonna pick this one. You're gonna pick the one that is guaranteed. You're gonna pick the one that's most guaranteed because if you're playing Squid Games, there's a high there's a high possibility that you might not make it out to see the 4.5 million or a little bit over 4.5 million because of how risky it is. So you should understand this because it's important when you're making your decisions when it comes to potential moves that could happen in the markets. You want to go for the one that's more, I don't want to say guaranteed, but more likely to happen. This is something that could take a lot of people in the trading space a very long time to understand, and many times people never understand it at all and then end up quitting. So you have to be patient. This is where patience comes into the space, and a lot of people don't have that. But it's human behavior. And if you don't know how to control or understand your emotions, then trading's not for you. That's pretty much it. I don't really have anything else to say because this is my watch list. And I have this section right here. It says do not disturb, clearly because I'm just not willing to trade based on the moves and setups that it has in the market, right? It's not appealing for me, doesn't match with my strategies, and it's pretty much it. Again, I share these potential setups um on a weekly basis in my Discord. It's a free Discord. While it's free, join. Um, we could talk, we could communicate, we can share ideas with each other in that group chat if you'd like. So it's free. And yeah, that's pretty much it. I don't sell any courses, and all I'm doing right now is just giving out some free information and value. Um, but yeah, that's where things are looking right now. Not sure if I have anything else. If something goes well, I'll end it up sharing with you guys. I'll end up sharing it with you guys. I got something that I've been working on. If all goes well, I will share it, of course, with you guys. So far, this is what my live account looks like. Let's do the last 3 months. Okay, so I'll take a screenshot. I'll just share it to myself so I can put it on the screen. And this is going to be, since my account has been activated from last month, this is just a screenshot of how things have been going. So, let me see. I'll airdrop it. I just took the screenshot just now and it just came in. I will send it over to Google Chrome. Oh, it's not it, is it? That was definitely not it. I already showed you guys that. Okay, boom. Why is it not? Oh, it's sending something else. Oh, it's sending what I was sending you guys before. You see, try that one more time. All right, it came in. All right, open in Google Chrome. All right. So as you can see, deposit in total was 1455. Um, Profit has been $168, and that's the reason why my account's equity is now sitting at $1,622. And the difference between my account's equity going from 1455 to 1622 is an 11.48% increase within about 2 weeks. So I just I shared that, and that's the reason why I shared this with you guys. I shared this template with you guys because this is the power of the compound effect. If you don't believe in the compound effect, I don't know what else to tell you. I don't know what else you expect from me if you don't understand this simple strategy of the compound effect. It's a no-brainer. Everyone and anyone, if they have the brain of an 8-year-old, they should see the value in the compound effect. 10% a week is is more than what investors are looking for. 10% in 2 weeks is more than enough of what investors look for. Honestly, I've spoken with multi-million dollar investors and they are realistically looking for between 5%, maybe 5 to 7% per month on average. That's rule of thumb of the type of percentage that I've been hearing from multimillionaire investors. They think that 5 to maybe 7% per month is a good amount for them. But what if you can make 10% every maybe 2 weeks? 10% every 2 weeks is 20% per month. 20% per month is 240% per year. That's on a, I mean, that's on a fair note. You could do more. You could possibly do a little bit less. Just obviously depending on your risk appetite, your strategy, if you're cutting losses short, if you're holding your winners for a little bit longer, just until the market tells you that it's, the trend is over. But these are just things that I've been learning from hedge fund managers who are multi-billionaires moving money in the market. And I think that it's something that many people are overlooking in the industry. So if you guys want to continue along this path and learning along with me, like, comment, share, join my free Discord again, and hopefully we can grow together. I look forward to seeing you guys on my next video, and thank you guys for watching.